Here we have the 30-minute price chart for Intel Corporation, stock ticker INTC. Here we can see that we're starting to give back some of the gains which were posted previously. This is some kind of interesting two-way price action that we're seeing here because for the most part, most of the technology stocks that were sold off during last Thursday's trading session really have not managed to recover those losses. There are some exceptions to that. Apple did manage to post new all-time highs, recover all of its losses, and then post new all-time highs. But that's sort of an exception to the rule here. If you look at Amazon or Nvidia, definitely Meta Platforms, the Facebook parent company, or even Tesla, a lot of that same activity has not been seen. Most of the trajectory is still focused on the downside, especially if you look at the Meta Platforms chart. I recently posted a video on that. You might want to take a look at that. That's kind of an interesting story that I think is kind of going underreported in the market. For the most part, Intel has managed to post a fairly strong recovery after Thursday, but we're starting to give back some of those gains here, and we're starting to regress lower. I think that this might be a bit of a cause for concern for some people because we did post some near term highs here, uh, close to 35.50, just below that level. But the broader declines that are being seen in some of these other stocks, could be a cause for concern for people if they're currently looking at Intel as a potential buying opportunity. But in my view, if we continue to see some declines here, I would expect this to start to, creating some new buying opportunities for the stock going forward. So in this video, I'll go over some of these levels that I'm currently looking at, which could possibly be used for new long positions for anybody that's not currently long the stock. Longer term, I am definitely bullish on this name. I do think that it's kind of a technology stock that has been missed by most of the market. It's been trading in a very long-term trading range, as we can see here if we kind of pull out a bit. There's a lot of sideways trading action here that just recently sort of broke out to the top side. So I do think this will probably start to get some more attention here relatively soon. But near term, we do have to kind of deal with these recent declines that have been generated and try to identify some possible price levels that can be used for new long positions. So currently, the lows that we've been seeing here come in at roughly 33.30. This is a bit of a price decline here from this double top condition, which was formed just above the $35 level. But it's important to remember that this $35 level, was broken, and we did see closing price periods above this mark. So this really does kind of eliminate the possibility that this was a false break. I mean, I guess you could start to make that argument if we do see prices break below this 33.30 level. I guess it could start to look that way, as if this upside price break was actually a false breakout. But overall here, we're still trading, we're still breaking out of this, longer term trading range. And for that reason, I do view this stock as a buy on dips. You just have to identify the right levels to start buying. So, part of the reason that I'm really kind of thinking that we could continue to head lower here, somewhat based on the fact that, um, we're seeing a negative indicator condition in the relative strength index. So mostly what this shows is that's this purple line down here. So mostly what this shows is that Intel is starting to develop some bearish momentum that is kind of starting to gain speed a little bit. Um, as this condition was happening, we were posting these highs, so this is a bit of a bearish divergence, and this would be another reason why I suppose you could start to characterize this recent breakout as a false breakout. But in order for that to occur, I mean, I would really need to see a break below these lows at 33.30 before making that type of assessment on the stock. Currently, this is really a short term momentum reading here because this is just a 30-minute chart. I mean, this is not a long term price history here. And as you can see, the line itself, this white trend line, is relatively small, like within the broader context here. So it's not a huge cause for concern just yet. But my line in the sand here does kind of come in at this 33.30 level. If we start to see a break here, we would have to start to target, the 33 level. Simply due to the fact that this area would mark the 50% retracement of this dominant uptrend move, as well as this rising 200 period exponential moving average, which is this blue line here. So we're starting to come into contact with these two regions here. And we're going to be meeting here relatively soon. We're not quite there yet, but it's a moving average. So this average will continue to rise as long as prices stay above this level. So we should be coming into contact here relatively soon. And this could form a bit of a support zone here going forward. From here, we get into a little bit dangerous territory because we're starting to see price gaps here that were based on this initial kind of breakout movement that occurred to the top side. This is one reason that upside price gaps aren't always as good as people think they are. Because if we kind of venture back into that territory, there's going to be a lot of buy and sell orders that are parked in that area, and those are going to need to be filled. So, there's a high probability once we enter into this space that we would need to retrace this entire price gap and fill this entire price gap. If that were to occur, we would lose the 618 retracement, the 61.8% Fibonacci retracement of this dominant move. So, at that point, we would really be looking at the 786 retracement, which comes in just above 3160 if we do continue to move lower here. So, as you can see, overall, this doesn't really, even with this negative outlook, I mean, even if we're looking for the negative parts of this chart, there still isn't really much to suggest here that we're going to fall back below this $30 level. There were many people in the market. I mean, I could post videos all day about people that are bearish on Intel stock and expecting the stock to move into the mid 20s and things like that. I mean, we're really talking about a majority of the market. It's very strange that people were so bearish on this stock. Especially given the longer term declines that the stock has seen this year. We don't have to go back very far in its price history to see prices that were trading above $50 per share. So, overall, these trend movements, we are just kind of reverting back to the mean here. We're kind of just returning back to the longer term averages, which make a lot more sense for this stock's valuation. It's really trading way too low. A lot of these declines are based on the fact that Intel is building foundries in the United States. That does cost a large amount of money, unquestionably. But Intel has been the beneficiary of government funding to help build those foundries. So, I mean, what more could you want other than the government helping you, to invest in the business? Overall, that sounds like a very bullish, environment to me. So, I will continue to look for buys on dips with this stock. Currently, my first line in the sand comes in at this 3330 level. We could see a bit of support developing into 33. So, there's kind of a layer of support zones here that could start to, prevent prices from selling off much further, could sort of ease the selling pressure here. But a downside break from there would really suggest that this prior gap would need to be filled. And that would start to make things a bit more erratic for this stock. So here's the current market outlook for Intel Corporation, stock ticker INTC.